Hello and good morning from Turkey. It's 9:54 a.m. It's 25th of February 2024. Today I decided to make my video in English as well as Turkish in the morning. The subjects are quite related because, as you know, I'm not just trying to add foreign investors or new investors to learn about the investing opportunities, but also trying to improve the economic and financial language abilities of the people who are my subscribers in my Turkish channel as well. So the examples do not just only apply to Turkey, they apply worldwide. First of all, the main topic this morning was there is no one single investment that's always the best. It's very easy to understand this if you want to. Nowadays, it's very popular, as you know. Nvidia is the equal to the wealth of all GDP of and the stock exchanges of China, Japan, Canada, all together. So this is a rightful stock, but there is a huge euphoria behind it as well. I'm not saying these tech stocks are bad. I'm not saying they are not calculated on a scale where you weigh them and say this, yes, they are all compared equally one to one. That's not the case. There is big euphoria in all investments. That's why there is no all-time champion. That's why when I ask about people investing, there is always basket of things. Otherwise, I just watched this morning, there's a gold conference in Canada, and they were joking about it because all these people, investors that came there, were gold bugs and gold interested miners and gold people. So they were all in suits. So they joked that it's no technology fair or show, because otherwise everyone would be wearing t-shirts, if they're talking about so you never see someone with a suit who is talking about the technology, crypto coins, things like that. So it's a odd situation, but that's also the brain acceptance is same, of these people. Is there one favorable over another? From time to time, yes. For example, gold is the favorable item at times for the central banks. Today, the most of the gold is bought by central banks and not as much by the people. And if there were no central banks buying the gold today, maybe the price could have been lower, like 1,800, 700, maybe. But there must be a good reason for central banks to buy while people are not buying. As we know, they have different agenda. The bureaucracy has a different agenda. They want to be the reserve currency in the future, or they want to protect themselves against the US dollar reserve currency, especially after seeing all these conditions which are forced on Russia and during Ukraine war, and to other countries who are also tried to be controlled through economic sanctions. So they want to have a security in case they do not agree with the USA and the Western ideology. They must have a solution. So it's like a security. It's like a money you put aside for the rainy days. So governments are putting money for the rainy days because gold is transferable, it's meltable, it's so it can be sold without any brand. It cannot be marked, It can be and it cannot be marked because you can sell it melted also. So you don't have to sell it in the mint brick condition, so you can sell it as a bracelet. You can sell it anywhere. So the reason that it's compared to crypto coins is that it may be transferred without leaving a trace, which is proved to be a little bit wrong for the crypto money because some people, stole other people's crypto coins and they were caught, So there must be a way to follow them up because in the end, they have to go to a bank to change it. For gold, there's a different situation. You can always exchange it in the black market, but so for cash money. Otherwise, you can exchange. There is no point in exchanging gold to gold, and crypto coin to crypto coin if you cannot spend it in crypto coin. So, in actuality, although they some may have similarities, they are not all the same thing. But this is not to compare the gold and crypto coins as well. Nowadays, the technology stocks are doing extremely well. Maybe they shouldn't be doing so well in an environment where everybody was wrong, just thinking that whatever natural will happen in the economy. Reason being, interest rates are raised by 24 times a quarter points in the USA by the Fed, and uh, normally you expect that the economy gets tightened, and there is not enough liquidity. There are big problems in the market, but the markets just acted totally opposite. There's a growth, not just in the United States, because you can say, well, the US is growing, so there is no problem in the economy. How about Germany? Germany is already in the completed first quarter of recession. How about Japan? How about UK? All their stock exchanges are breaking records, whereas their economies are not as powerful, or they are showing very bad signs of recession. So this comes to the point of, like we were discussing about security of the crypto coins and gold. Are these really attached to the economy at all? On the paperwork, on the surface, they look like a company must be affected by high interest rates because they cannot invest with high interest rates. So when investment stops, the future profits will drop. But the people on the market, they don't care about future profits or anything. They just playing a gamble, saying, this is just going to be my favorite for this time, for this week, for this day. Tomorrow can be another day, a big loss, everybody sells. And we all know that the majority of stocks and majority of all assets are held by very few, let's say, groups or people. Like 90% of American stocks are held by only 10% of the holders. Same in Turkey, 97% of all the stocks in stock exchange are run by 3% of the population only. So this depends on what the 10% or 3% decides, if they can control the outcome. If they cannot, they become losers. Like in 2008, a sudden change in Lehman Brothers case almost went all the major banks in the world, major insurance companies in the world, major car producers in the world like Ford, GM, and also insurance companies, also like Bank of America type, big asset control. They all may get caught on the wrong side of the equation and suddenly become big risky assets. But when the music is playing, nobody cares about this. Everybody's making money. That's very good time. But it doesn't exist all the time. So if you are putting aside something as an insurance like gold, you should not expect it to perform better than all the other commodities. I never bought gold so that it's going to reach $20,000, $30,000. I know for the past record, past 20 years, roughly gold makes about 7% annual. So plus the security, okay? And I never invest in paper gold. I never invest in paper silver. Only if I have very small amounts of money, just for the sake of moment, I can buy them. But knowing that physical gold and physical silver is much more expensive to acquire and hold, difficult to hold, maybe stolen, this and that. So there is a security problem. Still, everybody knowing all this, let's say, problems with these investments, still go for the problematic side because they feel secure only in that issue. So we can never say stocks are the best investments, ETFs are the best investments, whereas, there are many types of ETFs, there are many types of mutual funds. They may be diversified greatly or just acting opposite, like when the stock exchange collapses, there is a risk opposite ETF you can buy as well. So giving a common name is wrong for ETFs and mutual funds. But some stocks are belonging to growth stocks, which is what means is so the others will not grow. That's not the case. When we talk about growth stocks, we are talking about incredible increased possibility stocks. Okay, otherwise all stocks should be grown. Otherwise, if something is not growing, it's dying. So when you buy a beverage company or which are the things that are let's say expensed at the daily life, are not are mainly things that we consume. I mean, diapers, food, energy, gas, electricity. So they're all consumed, but they are not the best investments because they are limited in their increasing chances. But whereas if you have a software developed and you can just say, soon 5 billion people will be using my software. So it may work out or it may not work out. So that's why people are pouring into some items that are making good money. But when they collapse, like the dot-com bubble, they collapse huge, because if something goes up like a rocket, expect it to come down without a parachute, okay? Fall down without a parachute. So we must diversify in your investments. There is no one single investment that's the best. Otherwise, we can call these people at the gold mining meeting idiots, or we can call someone invested in diaper factories or electrical appliances, electricity, TV manufacturer, car, all dumb people. Why are they just not investing in software or, these 2, 3 chip companies? So we saw that these chip companies were in big trouble because they relied on Taiwan. Now they are building extremely heavily, including Intel and all the others. Soon, maybe there will be such an oversupply of these chips or semiconductors. Maybe they will turn to be the next generation of the electric cars, which are in big trouble right now due to big competition. They don't make sense to buy. In all countries, they are losing their favorability right at the time. So they were thought to be increasing rapidly. In China, they seem to be successful. In United States, they almost about to die. Only if governments force people, you cannot drive a gas car or combustion engine car. Maybe then they can sell electric cars. It's going to that nature. Nobody wants to wait half an hour, 2 hours for charging, running out of charges, where there aren't enough. In China, there is enough charges for, let's say, 5 cars. One charger for 5 cars. But in states, it's 20 cars get only one charger, so it's not as reliable. The countries, cities, it may be reliable within city when you are close to your home. Plus, how clean is the energy? That's arguable, because when all these chip prices and things went up in the U.S., the clean energy stocks, they collapsed. Last year they made only 10% in Turkish lira, TL, 10%, whereas the chip stocks made 210%, 21 times more. They are both American Nasdaq stock exchange stocks. So 60-70% of the stocks in Nasdaq, American Technology Index, they did not perform well at all. Only 6-7. It's usual. Before also, there were few companies that were always leading, but the difference was never so high. This is right now equal to 1929 highs, where there are so few companies that carry the burden of the whole stock exchange. So my point is this. I'm not saying don't invest in stocks, don't invest in gold, don't invest in crypto coins, this and that, but make sure you make a basket. So it's never going to stay the same. Like when I check the Turkish technology stocks, Now everybody is talking about, the stocks exchange in Nasdaq in USA. In Turkey, the mutual funds of the Turkish stock exchange, technical ones in Turkish stock exchange, are far ahead of the American stock exchange, Nasdaq. Okay, the ones that locally are making the records in the last couple of months. They made 120, 30% in the last year. And if you reduce the dollar increase like 50, 60%, that they made 60% above US dollars. So what I'm saying, are the technology stocks more compatible than the Nvidia, Apple, Google? So you can see the hype just by comparing two other countries' technology stocks. So uh, can you imagine? Before we had funds like AFT, YAY in the Turkish TEPAS, where we have mutual funds, and they were leaders. Right now, their names are down in the bottom, in the middle. They are technology US Nasdaq stocks. Uh, let's say they are made up mostly of Nasdaq technology stocks. They are way down in the comparison. And so can we say Turkish technology stocks are much better than the American and Silicon Valley's technology stocks? No. So that's where you should sense that very dangerous location we are now, at a very dangerous spot. So there is big hype, a bigger hype in Turkish technology stocks than American technology stocks. So it's time to, maybe you can make more money another month, maybe another 3 months, but it's dangerous. It's very dangerous. So you can enjoy it on the top of a mountain climbing if you're at the 100 meters, but if you fall, it's going to be a big fall. So you'll have no chance to survive. So that basically, especially for young people, they just go behind the hype, and we've seen what happened in the past year when they were buying hype stocks, and we saw that they all didn't end well, so they lost. So easy money, make easy money, lose easy money. Okay, so it's hard to get away from, after making good money in easy money, going back to making like 6-7% per annum. It's boring. It's boring where you can make 100, 200, 300%. So but that's life. So nobody, even the billionaires in the world, none of them have one type of asset allocation. They don't all buy land, whereas like Bill Gates is buying land, whereas others are not buying houses, whereas there are billionaires who are just buying houses. They have, I know billionaires who own 5,000-6,000 houses in the USA. In Germany, one company owns majority of the houses and rents them out. So wow, what a dumb business. If you have so much capital, why don't you all invest it in German growth companies, or medical companies, or electronics companies? So think of this as a small investor. There is no one single investment that everybody will quit and go towards that, because if that was the case, we would only have cheap investors. None of them will be real estate investors. None of them will be in consumer products, consumer staples. Okay, nobody will be buying US government bonds at 5% if they think they can make it in 1 year, in 10 years, 200 times. Why bother making 5% for guarantee? So don't try to claim this one investment is the best of all. Okay, there is no such an investment. Otherwise, everybody would have been on that investment. So don't blame yourself saying, I was on a wrong investment. Everybody was making billions. Well, many people have commercial buildings in USA. Now they're all about to go bankrupt, but it was incredibly good investment at a time. And that doesn't mean they won't be the incredibly good investment maybe in 20 years from now. So there is there is no bad investment or good investment. There is only good time, bad time investment, depending on your choices. So make sure as a small investor, you don't just go behind, some stocks that make big or some stocks that give high dividends at a time, or house rent is a dividend. But I would never buy a house for investment. I would buy a house with loan, 5 times, 6 times mortgage, like even in the US, because I don't like the house. I like the mortgage conditions, which are not given to any other investment, where you put down only 20%, and even up in the US, I know if it's your first house, you put like 6%, and the remainder is given by a bank. And at times they were given at 2-3% per annum, although now it's 6-7%. But even if they go to 2-3% again, not everybody is going to jump on that wagon anyway, because there are always investors, non-investors. They invest in something else, and people were investing in the U.S. stock exchange during dot-com bubble, during Lehman Brothers, and they were very sorry. They were punished harshly just investing in stocks. So make sure you stay diversified, have a basket of different alternatives, and make an average amount of profit. Try to catch the chip stocks as well, or chip ETFs, but don't rely on chip ETFs for the next 10 years. It's not going to happen, I tell you. They are going to fall very harshly. I can't give you a time, but nothing stays overvalued. Okay, nothing, no investment stays overvalued. At the time, there will be a competition, and because that, let's say, chips are making 57% profits like Nvidia, now 200 people will go into that area. In 1 or 2 years, they will catch up, and that company will have so much competition, just like the cars, GM, Ford. Where are they now? It's small Chinese brands are competing with them. So depends how quickly they can, the competition arrives there. Okay, so never stay invested in a single asset. Always diversify. You can choose to diversify more in the, let's say, chip stocks or stock exchanges, or in gold or houses or real estate, commercial houses, bonds, okay, government bonds. None of them is dumb. It's not a dumb choice. It's a choice of how much should I carry in my basket, okay? So I would never say don't invest 5% in US government bonds. We may go into such a deep recession that, let's say, inflation goes to recession and the growth goes to like 1%, gain is a good money. So there you are receiving 5-10% might be incredibly good, whereas all stocks are losing, every company is going bankrupt, So there are times which people who lived long enough to see all these favorable days, and future will not be exactly same as the past, but past gives you an idea that all of them will have very shiny days and very garbage days. Okay, so make your choices based on this. Don't make yourself guilty. Why didn't I invest in this? I should have invested. This is a wrong investment I'm making. Just maybe you rely too much on one type of investment. Just split it. Okay, split it to different, let's say, investment types, and then you are secure. For a person in Lebanon and Syria, imagine the internal war started. A person who owned all the companies, all the houses, all the real estate, they worth nothing. Okay, so people who had gold were able to take their gold and cross the border, so they were able to set up a new life in another country. So what you see like a best investment today might be the worst investment tomorrow. So always diversify. Don't care if others are making 200%, you're only making 80%. Okay, it's good if you can make 150% or 160, but don't worry if you're making 80 and sleeping tight and good at nighttime. So that's how you make investments, not what you see in the ads. Because if you look at the FX, where you can do leveraged purchasing of daily trade, you can see at the bottom there's a small note written: 70% of our investors are losers, only 20% are winners. And the 20%, we don't know how much they win. Maybe they are just $10 above their loss. Okay. So there is no such one way of getting rich. So this is a Sunday video to make sure for the young people, and I hope the older ones learned from their mistakes. There is no one favorable investment, and stay away from single investment. Always think of security, because I see people looking at the Turkish Stock Exchange saying, be careful. How can I be careful? What do you want me to do? Be careful. Be careful means get diversified, okay? You cannot be careful if you have the same stocks. Yes, I'm careful, but you're positioned in the same stock. And if it falls today, you say, oh, tomorrow it's going to go up. 3 days it falls, you lost the game, okay? So how can you be careful? You must be diversified in different assets. Okay, I hope you get a lot from this video, and in English maybe, but I don't know how much it helps you in your financial daily English. I'm also, these videos are improving my English as well, because otherwise I'm not using it as often as I used to. So it's a good opportunity for me to practice as well. So I hope you all have a nice day and stay all diversified and invested. Goodbye.